Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. A lot of things happening out there. We're getting closer and closer to this whole property tax relief thing coming in November. I need an update. And I know that you have been doing some extensive interviews. You've got all the facts. I know you have them all right here to share with everybody, Tom. And if you would like to see Tom's interviews, go to YouTube and go to @Florida Real Estate Insider. That's YouTube @Florida Real Estate Insider. You'll see all kinds of interviews with Tom on this subject. But here we're going to get down to the dirty. What's good? What's bad? What are people thinking? What direction is this going? Is it going to happen? Isn't it going to happen? So I got some questions for you, my friend, Tom McNamara.
Rapid fire, man. Hit it.
Why is property tax relief suddenly become such a big issue in Florida?
Sure. Yeah, it's a great question. So property values have risen dramatically over the past 5 years. And with that, property taxes rise. Now, we have a great program called Save Our Homes that if you're a current Florida resident, it caps your assessed value, right? If you're a current homeowner, and their values have gone up, but not as dramatically. The issue is as new people come in, new construction, people buying an existing home, their tax base is reset, and it's reset to basically market value. And so I'll give you a really quick example. My home, which is a nice home, I pay about $3,600 a year on my home, right? But that's because I bought it when prices were much lower. If I sold my home today, the new buyer would pay over $9,000. Now, $3,600 is $300 a month. $9,000 is a lot more. I'm not going to do the math.
A lot more.
Exactly. So it's a barrier to entry, or it keeps you buying a lower priced home, or it makes the home sit on the market longer.
So, yeah, but doesn't it feel like we're working for the government then at that point with that much of that?
That's another thing, right? So Save Our Homes was designed to keep Florida homeowners in their homes and not have their taxes go up too much. What it did, though, is essentially shifted a lot more of the burden to the newer people. I don't think anybody anticipated that prices would go up so dramatically in such a short period of time when they passed it.
Yeah. So what actually is being proposed right now?
Okay. Ron DeSantis came out in May, and there was a lot of stuff before that, but Ron DeSantis came out in May and ordered a special session, and his pitch was a $250,000 exemption across the board on all taxes, both school and non-school, for homesteads. Okay. What actually hit the legislature immediately, day one, was to exclude schools. And then they created it.
Which were originally in it, right?
Which were originally part of his exclusion, correct. So you would have excluded the first $250,000 of value of your home. So anybody that has a home that's valued under $250,000 would pay zero, all right? Or effectively zero. They'd still pay the non-ad valorem taxes like garbage fees and stuff. So the legislature ripped that out, and I understand why, because schools are a lot more complicated than the other stuff. The other stuff's complicated, but schools are way more. Hopefully they can pick that up next year or the year after and do something about it. But they eliminated that, which watered it down. And then they also made it phased in. Okay. So it's phased in. The proposal would be $150,000 in 2027.
In the first year. Okay.
And $50,000 for 2028. But they did something I think is brilliant. And finally, I can applaud the government for something. They, for the future, after the 250, they've indexed it to inflation. So every year it will go up according to either the CPI or some other measure. I forget the other measure, whichever one is low, right? So but it's going to go up every year, right? Unless we get deflation, which I don't think will ever happen.
Okay.
So they built that in, and they built in a pathway towards complete elimination. Now it's complete elimination of the non-school side, right? And the pathway doesn't have a time frame. It doesn't have any guardrails. It doesn't have any teeth, right? So it just says that they will do it.
So that's giving people a lot of uneasy feelings. They don't know where, and I think this is the primary contention that people are concerned with right now is where is that money going to be made up?
So you have two camps in that, right? You have two main camps. you have the government has too darn much money and I want to strangle them as much as I possibly can. And I really like to know that I can call the police or fire, or I can go use a park or library, right? You have those two camps and they're both right in a way, and they're both battling out for what the right thing is to do. So we'll see who's going to win that argument. I think there's plenty of waste, fraud, and abuse in the government. I also do the fact that I can call the fire department if I have a fire and they'll show up, right?
I cannot imagine that a conservative government wants to do anything to affect our fire department and police. If you remember, it's primarily, and in my opinion, the conservatives that were not against defunding all of these things. They were for funding it. So I can't imagine that they're going to compromise us losing any of our first responders or police department.
So that's 100% right. So in the bill, it actually carves those things out and says that Homestead, I believe it says Homestead, it may say all property taxes, I don't remember, can only be used for these core things, which are police, fire, government operations, which is vague, government pensions, and a couple other things, right? What it excludes is things that are somewhat optional. So the parks department's not in there, the library's not in there. There's some other functions that some governments do that aren't in there, right? So they protected and prioritized the things that we're talking about, but that hasn't stopped the League of Cities and the county associations to all come out and say, if this passes, you're going to lose your police and fire. They're all saying it, which is...
Yeah, they're all going to say that. And you know what? It is baloney. It's absolute baloney. They're spending our money frivolously. And there is money for this. But I want to talk about real numbers because I think this is where people really can sink their teeth into it. Average sales price right now is about $430,000. Let's just kind of hit it in the middle and say a $600,000 house, you're going to pay about $6,500 a year in taxes. Would that be about right? About 1.2%?
A little bit more. It's closer to 1.5,
right.
1.7.
All right. So it's 1.5%. How much would this actually save? Based on the way this looks like it would go through, if it even went through now, how much would that save somebody? $2,500 a year?
Well, yeah, a little more than that. That will be 1%, right? If we just go to the full 2 years down the road, right? It's going to save you about $3,700 on a $600,000 house, right? Anything above 400, it's going to save you $3,600, $3,700 because that's about 1.5%.
I can tell you right now, at $3,500 even, that is $291 a month.
Yeah.
I guarantee you that's going to make a difference in buying power right there.
100%. So then that gets to another point that is a reason to not like this so much, or to look at how it's could be negatively affected. So capitalization, right? So when we all buy things based on how much they cost monthly. Not we shouldn't, but we do. And when you lower that 291 or whatever number you came up with, and that goes away, I can now use that as buying power and buy more house, which allows the seller to charge more. And so that savings will, over a period of time, whether it's in 6 months, a year, or 3 years, that savings will get capitalized into the prices. So short term, it probably will impact the market positively and allow more.
Long term, you're saying natural evolution is going to absorb it into price, so you're gonna pay for it one way or another. So that then tells me, if your philosophy is correct, that tells me you should buy a house right now as before this happens, because once it does happen, or if it happens, that house is likely going to go up in value. The next buyer is going to pay for it, even though the problem was fixed before. That's interesting. Who would benefit the most right now from this? Retirees, first-time home buyers?
Yeah, probably two main groups I think benefit the most. One is longtime Florida homeowners, right? Homesteaded homeowners that have houses that are valued 3 and under, that are on fixed incomes, right? So you got grandma living in a house, and she's lived there since 1996, and it's only worth $200,000. She's not going to pay any non-school taxes at all, right? Her bill for that is for zero, right? So that's a huge win for grandma, right? And then the other people are home buyers that are or first-time home buyers that are ready now to buy, or ready within probably.
Now, if they do a phase in, are first-time home buyers going to be able to get the benefit if there's a phase in where you have to have lived, or do you just have to have a residency in Florida for 5 years leading up to it?
Great question. That was probably the number one question that came up in my FAQ was, do we qualify, yes or no, based on and the answer is super, super simple. Residency. That's all that matters. If you are a Florida resident on December 31st, 2026, you qualify. If you become a resident on January 1st, 2027, you do not. Period. That's it.
Okay, so a first-time home buyer moving here from Michigan to take a job as a nurse is not going to get the benefit of it.
They can. If they move here before December 31st, 2026. They don't have to buy it.
You're getting
all they have to do is move here and establish residency.
This is a call to action, folks, that you should be hearing loud and clear. This is a direct call to action to get purchased now. If you're going to buy as a primary residence, even if this doesn't pass the first time around, you'll be in for the second time around. That's really good news. Then what happens to schools and local governments? Do you think there's any chance that there would not be enough money to fund, the police and fire and all that?
Hopefully not. Hopefully it doesn't go as deep as police and fire. What a lot of people don't understand is they think that local government works 100% off of your property taxes, and that's absolutely not the case. Some are more heavily reliant on it. The smaller counties that don't have a lot of infrastructure and commercial and those kind of things, those counties, it's 50-60% of their income. The county's income is property tax, and then about 20 to 30% of it is homestead property tax. So in a small county like Levy County, you might be looking at a 30% reduction in their total revenues over time, right? Yeah, that's going to be impactful for them, which is why the original plan that DeSantis sent in had a carve out for them where the state would basically backfill them and make them whole.
With a trust.
To rip that out. They took that out and threw it away, right? Which I think was stupid. I think that might be the thing that tanks the bill. Okay.
But you know what? It became very complicated because I know this much. As soon as they started creating a trust, there's no way to manage that trust and know that the funds would have been distributed fairly to those appropriate counties. They didn't have a solution for that.
Yeah, they tried to do it all in a 2-day session, which was too late. But anyway, so that's gone. So, but you look at like an Orange County, right? And I don't have the numbers exact. I'll get them wrong here, but basically, Orange County has about an $8 billion budget, and only $100 million comes from property taxes, right? So there's so many other sources of funds, but the majority of those funds are earmarked for specific things. There's a lot of money that comes in from the tourism taxes, but it can only be used on things like the convention center and promoting tourism, and which is why we invest so much money in the sports things and the stadiums and the arts, right? Because all that money is what draws tourists in. And so that money is like
That's huge revenue. And you know what? We are designed to create revenue from other streams like that. And I think that was part of the whole plan, is that we have other ways of generating revenue. Even there was one of those proposals that was going to increase our sales tax by 3%. 3%. But when we did the math on what you pay sales tax on in Florida for the average family, it was about $850 a year more in expenses, but you'd be saving $3,500 to $4,500 a year in property taxes.
So that only if you're a homeowner, because if you're not,
it's another reason to become a homeowner, Tom. It's just everything adds up. There's no such thing as a rich renter. They don't exist. I've never met one, and I would bend over backwards to help somebody that's currently renting become a homeowner, and you would too. I got a final question here, just one more thing here, okay? If you were advising people out there right now, today, what would you tell them? Should they vote yes or should they vote no on this?
All right. So I never like telling people how to vote. And
yes, you do.
I don't. Individually, I might. Honestly, I truly don't know how I feel about this particular proposal. I'm leaning heavily towards yes, because I think anytime you can nip the government down a little bit, it's good. But I understand all the reasons why no makes sense to certain people. So if you are going to vote for yourself, for your own self-interest, and not think about everybody else, the reasons to vote no would be that you think the government does a great job and they don't have enough money, right? Hey man, there's people out there like that.
Oh,
The other one would be people that think that they are going to be permanent renters and they're never going to own a home because in their
they're
self-interest.
victims. They're victims anyway.
And then there's the people that think that it's not enough, right? Which is where I am. It's not enough. I want to make them go back and do it right. So I'm going to vote no on a half measure to force them to go back and do it right. I understand that logic. I think it's broken because I don't think they will, right?
I think it's broken too. And I think that a lot of people will probably lean in that direction. But I
I
would
think
tell
that's
you
going to be a
something.
lot of your no's.
It is going to be easier if you vote it in now and then get improvements on it later, because how much easier is it going to be to vote an additional phase in later if it's working? So in other words, if the police departments don't crash and burn, if we're not laying off firemen and teachers all over the place, and people are saving $2,500 to $4,500 a year on average, and nothing crashes and burns, then they could go, now we're going to phase out the school taxes, right? And that's
Mhm.
going to be another $3,000 a month or a year for you. I think it would be easier to do that. And just now we could go into this if they voted yes, and all of a sudden, oh my gosh, there's no room to pay the police department. The fire departments are going bust. The cities can't do this. Then we could vote it out and start over again. But
Voting
not
out-
give yes.
Voting out an amendment would be virtually impossible. Okay. Because it's an amendment to the Constitution. That's
Yeah,
the danger.
I know.
It's strength and danger.
I
It's
hear
the
you.
strength and the danger to get into an amendment. But what they can do is come up with a solution that solves a problem, right? What could Tallahassee do if they find out that too many cities and counties just can't do it, can't find it in their budget? It's going to work. Sometimes that is a reality. That's when they go ahead and say, hey, let's raise a sales tax to share the money, or let's create a tourism tax that taxes the people coming in here and earmark that particular money to.
As long as we're not doing something to dissuade tourism, we'd be okay with that. But it's got to be soft enough. But you could put 1 cent more on tourism. You could put 1 cent more on sales tax, and nobody would ever feel the difference. You would not
100%.
feel an extra penny. You really wouldn't. Tom, thank you for helping us all understand what's really happening with Florida property taxes. Thank you for helping us with our interview with Michael Warowski from the Florida Insurance Commissioner. We've done a phenomenal job on bringing information to the public. It's a lot of information. It's a lot of misinformation that's out there as well
Absolutely.
that's floating around. And just to clear it up, whether you are buying your first time home, thinking about moving up, refinancing, simply trying to lower your monthly costs, property taxes are just one piece of the puzzle. My team and I can show you how taxes, insurance, interest rates, financing all work together so that you can make the smartest decision for your family. Because I can tell you one thing, you don't have anything to worry about in this. If you don't own a home, you're going to get caught up in it as a renter. Own a home, get the benefits, gain the equity. You will
Absolutely.
retire a better person for it. And Tom and I are committed to helping you. Tom McNamara, EXP. Go to YouTube and go to @Florida Real Estate Insider and see Tom, or go to YouTube and go to Bruce Woodburn, the loan arranger. Been lending for 36 years right here in Central Florida, all 50 states. Can help you. Got every loan program you could possibly need. And you'll always get an honest answer with Tom and I. Thanks for joining today, buddy. Have a great day.
Thanks, Bruce. Make it a great one.